Hello and good morning, folks. We are in TGIF, and as I welcome you for Almus Market Mornings, your daily dose of financial update. This is Shikhar Garg, your host. And what a hectic day it was in financial markets yesterday. Lots of news, lots of updates, and a lot of volatility. So before we go ahead with our technical Friday session, I just fill you in with some of the news updates that we've received overnight. But as we see, crypto's prices caving led to further liquidation in other risk assets across the region. US markets swung widely again as overwhelming bearish sentiments countered oversold conditions. US PPI for April came lower than market expectations, adding to markets' anticipation of inflation peaking. Yields still remain steady. Move by Finland to join NATO, which may be followed by Sweden, raises concerns of Russia's negative reaction by stopping gas supplies. Now, this is another geopolitical tension scenario building up, but the Senate confirmed Jerome Powell for second term as Federal Reserve Chairman. So there's some steadiness with respect to financial markets on the central banking side for US. On the other relief side, we have China, wherein Shanghai aims to realize zero COVID at community level by mid of May, possibly, thereby reducing the restrictions and the operations for activities resuming in orderly manner. Though the restrictions continue as of now, none of these had a discernible impact on the market's risk-off move. US dollar strode to the 20-year high of 105 as all-round buying sustained. More help coming from euro, which carries maximum weightage in the index. It further got boosted by the Treasury Secretary Janet Yellen, saying she believes the Fed can bring down inflation without causing a recession because of the US strong job market and household balance sheets, low debt costs, and also a strong banking sector. On the domestic front, CPI in India came at 8-year high, with all the components seeing price pressures would normally have been bearish bonds and rupee. But then we are now not in an environment of completely market determined prices. So only see a marginal impact today. Debate now surrounds whether MPC would hike a 25 basis or a 50 basis hike in June. So this is more on the fundamental side. I'd just want to take you through the technicals as well. So Nikunj, can you just tell us what's technically saying?
Yeah. So good morning all. Welcome to the graphical representation of financial markets, which is technical analysis. So talking about dollar index, starting with it, dollar index, as Shikhar told, it has already surpassed 105. Once it touched 105, and right now it is trading at 104.65. So as far as it is staying above 104, possibly we are seeing that it may come till 107, 108 levels. And looking at dollar index, possibly will have more impact on dollar rupee as well. Coming to dollar rupee, right now it may open somewhere around 77, 35, 36 levels. And we feel that as far as it is staying below 77.50 levels, as RBI has been protecting strongly there, we have the opportunity to see a dip towards 77 figure levels. But the moment we see dollar rupee closing above 77.55, possibly 78 half can be seen soon. So for importers, any dip towards 77 figures can be hedged, and for exporters can wait with the first tranche of hedging at 77.50, followed by 77.70 and 78 figure levels. Euro dollar, in our last commentary, we told that it is soon expected to come at 1.0350 levels. Yesterday, it already touched those levels, and right now it is trading at 1.0395. We feel that any bounce towards 1.05, though it is 2 biggie higher from here, it can be seen as an opportunity to go short. So exporters can look to hedge their exposures at 1.05, 1.0550 levels. Talking about gold yesterday broke our very strong support levels of 1830, which we have been talking about since long. Now it has to cross 1855 to gain some positive momentum. Otherwise, we'll continue to see the downside. Now the next support comes at 1780, which looks more probable looking at the current market situation. So this was all from my side. Handing over to Shikhar.
Okay, as usual, Nikunj, you were crisp. Folks, I wish to remind you it's Friday the 13th. Hopefully, we do not uh, reminiscent any sort of Friday the 13th or see any sort of Friday the 13th moves today. Till then, keep managing your risk. We take goodbye. We catch up again next Monday. Thank you.